please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
First, to the crackdown by agencies in the PNB fraud case continues. The Enforcement Directorate has attached 41 properties valued at a little over 1,200 crore rupees belonging to Mehul Choksy under the PMLA. Now, the attached properties include 15 flats and 17 office premises in Mumbai, a mall in Kolkata, a 4-acre farmhouse in Alibag and 231 acres of land at various other locations. Separately, we learned that Nirav Modi has been writing to officials using a virtual private network or VPN in order to hide his location. To understand these developments further, let's go across to Utkarsh Chaturvedi, who has been tracking these stories very closely. Utkarsh, you are currently standing outside the Enforcement Directorate, where the ED is clearly cracking down hard on Mehul Choksy and Nirav Modi, and we now learn that Nirav Modi has given a concrete proposal to PNB. A, what exactly is that proposal? And B, what's the line of questioning as far as ED's plan with PNB is concerned today?
Kritika, three major updates today when it comes to the investigations by the Enforcement Directorate. The first one, obviously, is that Nirav Modi has written back to PNB and said that he is willing to pay back money. He has offered jewellery worth 2,000 crore rupees, immovable property of 50 crore rupees, and current account deposits of 200 crore rupees. Now, this is obviously in response to the communication which banks had sent to Nirav Modi. But we have to really watch that the jewellery, first of all, what he's speaking about, 2,000 crore rupees, is attached by any of the agencies or not. Remember that an MCA order has already been passed against all the related parties of Nirav Modi, and everything has been frozen, so we really don't know that whether is this 2,000 crore rupees coming from. So this is what a part of the letter. Second update, as we told you on Monday, that ED will start attaching properties of Mehul Choksy and Nirav Modi. That this is what happened today. Somewhere around properties worth of 1,200 crore rupees of Mehul Choksy across the country has been attached by Enforcement Directorate. Yesterday, it was Nirav Modi's properties which got attached by Enforcement Directorate. Yesterday, one more important thing which happened was that ED moved court, which was the first step in extradition, to issue a non-bailable warrant against Nirav Modi and Mehul Choksy. That order is reserved by the court. And at this point of time, as we speak, the PNB MD, Sunil Mehta, is being questioned by Enforcement Directorate. He came here around 11 o'clock. It's almost 4 o'clock. So around 5 hours of questioning has been going. So remember that Sunil Mehta has been questioned by the Central Bureau of Investigation on Saturday. We have also picked up yesterday that the former PNB MD can also be called by Enforcement Directorate for questioning. The ED of Finance, KV Brahmaji Rao, has been questioned by CBI and ED both. So clearly, both the investigative agencies are broadening the horizon and widening the whole investigation process. Remember, we have been speaking from the first day that both of these agencies do not believe that it's only those two people who were named in the FIR who were responsible for all the fraud. And now what they're really looking at, one is the modus operandi, and second, that were there more people involved in this whole fraud.
Okay, Utkarsh, thanks for putting that into perspective. So, a lot of updates coming in by the hour. We will keep getting Utkarsh to give us live updates. But the other big story that is coming in from North Block, the government is considering to bring in a new law against fugitive economic offenders. The Union Cabinet is expected to consider the draft law at its meeting that is currently underway. But speaking about PNB, here's the big CNBC TV 18 exclusive. After being hit with a mega fraud, the cash-starved Punjab National Bank is stepping up its recovery efforts. We learned that the bank has invited expression of interest to acquire majority stake in the debt-laden Ind-Bharat Thermal Power Limited. Ritu Singh is here with details. Ritu, is this just the first of PNB looking at selling assets to be able to recover dues?
Well, actually, Kritika, a lot of banks, in fact, all banks are under tremendous pressure with the new RBI NPA resolution guidelines kicking in, because a lot of these restructured accounts that banks have undertaken, if they're not implemented before the guidelines kick in, will all become non-performing assets, and therefore banks will have to make excess provisions and provide for them, dip into their capital basis. PNB, of course, is already struggling with a lot of other issues, and therefore this is not an additional pain it would want to take. So one such account is Ind-Bharat Thermal Power Power Limited. In this particular account, SDR was invoked last year, but no buyers were found since. But now PNB has sent a strict deadline. In fact, by 9th of March, we understand it is looking for EOIs to be submitted for a 100% stake sale in this company, along with management control. The debt is a little over 1,000 crore rupees, but the reserve price, we understand, has been set at 823 crore rupees. Of course, a lot of other large lenders are also involved, including Bank of India, Axis Bank, State Bank of India, Canara Bank, Vijaya Bank, besides Punjab National Bank. But the process has kick-started. Hopefully, it will be closed by March and before the RBI guidelines kick in. Otherwise, this amount will have to be declared in NPA. Remember, we're talking of, it's a thermal power plant's capacity of 300 megawatts, which is currently in operation in the state of Tamil Nadu.
Okay, fair enough, Ritu. Thanks for taking that and giving us those exclusive details. But there's a lot happening across the banking sector. So the government has decided to close down as many as 35 international branches of public sector banks. Remember last year, the North Block had asked public sector banks to look at rationalizing their domestic as well as their overseas branches in order to boost their financials. Sapna Das, who broke the story earlier today, is here with the details. Sapna, why were these branches shut down? And also, will more foreign public sector bank branches be shut down in the coming days?
Well, clear message coming in from the government as an ongoing process of the reforms that they're trying to adhere to very strictly for the public sector bank space. And here the government has reiterated that 35 international branches of public sector banks are due for closure. Apart from this, in the second round of consolidation exercise, 68 to 69 more offices are being examined, and these would cover subsidiaries, joint ventures, representative offices, remittance offices, including branches, as to what should be done about them, whether they should be completely shut down or there can be some kind of further rationalization. The third indication that is coming in, of course, is the fact that it's basically consolidation in certain geographical locations. They do not want overlapping of too many branches of a number of public sector banks in the same location. So that is what it clearly indicates. Last but not the least, this would also indicate consolidation of the equity stake of various public sector banks who may be partners in joint ventures. So this is an ongoing initiative by the government, but a clear message going down the line that rationalization of costs is very much on the cards, and all those operations which are not yielding profits to the public sector banks, well, either they will have to be closed down or some kind of consolidation will have to take place.
Okay, Sapna, thanks for taking us through that. Now, speaking on the move to shut down international branches, Rajneesh Kumar, the chairman of State Bank of India, said that this shouldn't be linked to the Nirav Modi fraud case and that the rationalization of branches was to bring down operational costs.
I think it should not be linked with the LOU or Nirav Modi case. But this rationalization of branches, whether overseas or domestically, that has been on the agenda of the government. Yeah. And we had this exercise done at the time of Manthan, that banks need to bring down operational costs. Regulatory requirements across the world, they are increasing. So unless the business volume justifies existence of an office, we have to rationalize, and there is no choice.
Okay, from one big story to another, let's get you the latest in the INX media case. A special court in Delhi is hearing the Karti Chidambaram arrest matter. CBI has sought Karti's remand for 14 days, saying that his conduct has been evasive. The agency has also informed the court that Karti couldn't be questioned last night as he was hospitalized. Responding to the arguments, Karti's lawyer, Abhishek Manu Singhvi, has accused the CBI of making an effort to prejudice the court through half-baked facts. Karti's father and former Finance Minister P. Chidambaram is also attending the court proceedings. Well, let's take a very, very short break though on that note. But up ahead, is Etihad planning to part ways with Jet Airways? Perhaps yes, according to a report. More when we return. Welcome back. Yes, after the bell on CNBC TV 18. Now, ahead of the long weekend, markets took a breather with cash volumes on the lower end, but banks led a sharp fall in the last hour. Nifty traded almost flat until 2:30 p.m. until a sharp fall dragged it lower by 0.3%. The Sensex ended just above that 34,000 mark. Bank Nifty fell more than 200 points, while mid-caps ended with cuts of about 0.4%. Anuj Singhal is here with the wrap of today's action. Anuj, clearly bears seem to have a strong footing as we go into the long weekend.
Well, bad closing for the market. Didn't look like that till 2:30, but towards the end, all of a sudden, there was big selling, especially in banking stocks on the weekly options expiry day. And the Bank Nifty got very close to its 2018 lows and also the 200-day moving average. Cash market volumes were low, though they did pick up in last hour of trade. Big banks led the selling, so ICICI, SBI, HDFC Bank, Yes Bank were all down. Infosys, Reliance, UPL were the other losers on the index. On the gaining side, you had BPCL, IndusInd Bank and Eicher Motors. In the FNO side, there were some big losers like Indian Bank, HDIL, Reliance Infra, Motherson Sumi, Apollo Tyres and Dish TV. While on the gaining side, you had IDBI Bank, Dalmia Bharat and NIIT Tech. All in all, you'll have to say that it was a week where bears made a strong comeback. After that Monday rally, the next 3 days clearly belong to the bears.
Okay, so let's see if the bulls are replenished after the long weekend. Anuj, thanks for joining in and taking us through that. But let's get stock specific then. A Kappa India report suggests that Abu Dhabi-based Etihad Airways may part ways with India's Jet Airways. A tweet from Kappa India's handle says, and I quote now, Kappa research indicates that Etihad may divest its 24% stake in Jet Airways, possibly by the third quarter of FY19. Now, this could lead to a rationalization of capacity between India and the Gulf, particularly Abu Dhabi, end of quote. But staying with the aviation space, sources tell us that the Aviation Ministry has prepared a draft expression of interest for Air India stake sale, and a group of ministers will meet next week to finalize the contours of this expression of interest. Ashpreet Sethi is here with the latest. Ashpreet, what are you picking up from your sources, and do we have details of the exact document that has been sent out?
The Aviation Ministry is giving its final touches to the expression of interest as far as Air India's stake sale is concerned. We pick up from sources that as far as the draft is concerned, there are certain contours which have already been decided, which will be placed before the alternate mechanism or the group of ministers, which is being led by Finance Minister Arun Jaitley. Now, what we pick up is that there are 3-4 important aspects that have been covered by the Aviation Ministry in the draft expression of interest. First being, as far as employees are concerned, certain measures have to be kept in place to ensure that their interests are kept intact. In fact, the second point here being that as far as offloading of government stake is concerned, whether it will be beyond 51% or between 51% to 100% is what certain options have been recommended by the Aviation Ministry. The third aspect being that as far as the whole saga of who will take over the debt, that is also something that the expression of interest will be taken care of. Now, what we have picked up from sources is that March 1st week was the deadline that they were looking at putting this expression of interest in public domain. However, next week itself, the alternate mechanism will be meeting where ministers will be discussing what will be the final contours of Air India's stake sale. We'll have to wait and see what happens next, because remember, Indigo and a foreign airline has in fact shown interest as far as Air India is concerned. No other player has come officially on board as far as Air India goes. So we'll have to wait and see whether by March the government will be able to put the expression of interest in public domain.
Okay, Ashpreet, thanks for joining in with that. Now, it's the first day of the month and we have auto sales data trickling in for the month of February. It was a strong month with all companies seeing robust sales, starting with Ashok Leyland. The company beat street estimates with the total sales rising almost 29%. Maruti sold about 4,000 more cars this month as compared to the same time last year. Escort's dream run continues, with the company seeing about 50% rise in tractor sales. Meanwhile, exports have finally picked up for Bajaj Auto. The company saw its three-wheeler sales spike up almost 100% this month. Eicher Motors also witnessed a 0.25% jump in their Royal Enfield sales. Mahindra's total sales rose a healthy 19%. The only dampener really was Tata Motors. The company selling fewer cars as compared to our poll, but 34% higher when you compare it on a year-on-year basis. We will take a very short break again on that note. But on the other side, Fortis Healthcare releases its second and third quarter earnings at midnight. Details when we return. Welcome back. Now, Fortis Healthcare reported a loss for their second and third quarter earnings late last night. Remember, the company is battling issue of litigation and reduction in the promoter's stake. The company tried elevating some concerns over a conference call. Ekta Batra, who has been tracking these developments, joins in now with more details. Ekta, what are the key takeaways from this call? And, more importantly, what exactly has been pointed out to assure investors from that audit report that had been undertaken? Well, some important takeaways which came in from the Fortis investor call that they held after the numbers were released last night. So, for example, the company has mentioned that they have initiated an investigation going on with regards to the related party transaction issue, and there is already a SEBI investigation going on with this particular case. Remember, that was already qualified in the notes to accounts in yesterday's press release as well. The loan, according to them, which is basically this related party transaction loan of over 470 odd crores, should be fully paid by end of Q1 FY18. Separately, Fortis did mention that they have some challenges with banks due to promoter linkages and in terms of the kind of loans, though they've never defaulted on any loans ever. Separately, they said that they do not believe that Fortis needs to go to court when it comes to any sort of fundraising, so no real connection according to them with regards to the Daiichi arbitration. The auditors have signed off on the report which was released for the Q2 and Q3 numbers, but they have pointed on 3 items in the audit report as per the Fortis management. Nothing is finalized when it comes to the fundraising for funding the RHT transaction, so that's an important point to note. And lastly, the SRL demerger plans could change in case there is an investor that comes in finally for Fortis.
Okay, Ekta, thanks for taking us through that. Let's get to an exclusive interview now. Cipla CEO Umang Vora has said that the pharma giant is aggressively looking for acquisitions. Speaking to my colleague Archana Shukla, he also added that Cipla has pushed back its $5 billion revenue target. He has a slice of that exclusive interview.
Now in terms of assessment for growing your scale in the US, would you look at more acquisitions? There are more, global assets that are coming on the block right now. Sandoz has, spoken. There are some more assets that Teva could hive off. Would you still be in the market for looking, and if you are already looking at something?
We will always look. But if you were to ask me whether our capital allocation would be more towards generic, and that ticks the one, I think US generics less. Emerging market generics, which are deep market pools like China and Brazil, yes, we tick that box. Specialty as a new area, whether we'd spend more money into specialty, for sure, yes. Would there be some, assets within Cipla that you would want to divest? Would that also be on the mind when you're looking at charting this, the consolidation of your business, where you have looked at divesting a few of your emerging markets assets? Does India feature somewhere? Is there something that you think doesn't work for Cipla? In Cipla, which you would... So I think we've done quite a few. We've done our vet business, we divested that, and a couple of these portfolios in other countries, Croatia, etc. We've sold all of that. So all that's done. Would we like to divest any part of our business? Not sure. If we do a really huge deal in Cipla that transforms Cipla for the future, and the likelihood of that is low, could we use one of our businesses as as a means of raising some amount of cash? For example, could we think of our India business or our South Africa business in a different manner, right? Yes, but we will never sell them. Okay. So we'll never be sellers for any of our businesses. We might use them to bring in capital, but never to sell them. But I don't think it's going to be the core markets. At this point in time, Cipla in no part is up for sale, right? So Cipla's done away with what it needed to, and right now it's in the mood to consolidate. And buy more. And buy more. In the US market also? In the US specialty side, yes.
Some important clarification coming in there, and that's of course the big exclusive interview. We will have to wrap up this edition of After the Bell. Stay tuned CNBC TV 18 though. All the market action of the week and of the day is lined up on the other side, as taking stock will take all the action forward. Stay tuned to CNBC TV 18 through the day.